let's talk about moratorium and what it really means. What does moratorium mean? Moratorium means an interest holiday for borrowers for 5 months that was given by the government of India, which started in the month of April and ultimately extended to the end of August. What this means is whether you're a corporate borrower, a retail borrower, an SME borrower, an MSME borrower, it does not matter. You don't have to pay interest on your loans if you can't afford to do so for the time period of 5 months. What's happened since then is that there's been a little bit of confusion as to exactly how moratorium is defined, availed and passed on to customers. Now this is because moratorium was a concept that was enacted hastily, if you might call it that. The government was suddenly faced with lockdown, businesses shut, and there was a huge spike of NPAs that was going to come. So in order to make sure that the financial system was stable, the government gave a moratorium, but the RBI did not provide strict guidelines as to how this has to be carried out and how clearly it has to be defined. So today, the problem we're facing because of this is that some banks, if they had customers who, let's say, made a payment in June but not in April or May, they are classifying this as a customer who's no longer in moratorium. Customers who may have made payments in April and May but not in June are classified as customers who are still in moratorium. And each bank seems to have its own classification, which is why you recently learned that in Axis Bank, although Amitabh Chaudhary came and said loans under moratorium are 9.7%, analysts from the analyst community came forward and said, no, it's not. Disclosures point to something different. Federal Bank, ironically, being a smaller bank, was the only one which was very clear about moratorium. They said, okay, in March end, so many people, gross number, availed moratorium. As of June end, so many people net are still availing moratorium. And the difference is the people who are no longer in moratorium. And mind you, these people who are borrowers who have made all 3 payments in April, May and June. So federal is one example where you have clarity. In practically every other case that's been reported till now, clarity is lacking. So is this the bank's fault? No. Is this a regulator's fault? No. It was a need of the hour, and it was a special policy that was enacted in record time to make sure that our financial system is stable. So there will be a bit of grey area. Ultimately, all this will clear up in Q3 when the numbers are out, or rather Q2, once moratorium is lifted. So once moratorium is lifted, banks will be forced to now recognize anybody who's not making a payment as NPA, which is why all the brokerages have said in the Q1 results, asset quality, slippages, these figures you should not pay too much attention to because they're hiding behind the moratorium. Once the moratorium lifts and it comes out, that's when we'll know the real extent of provisioning required by these banks. We'll know the real extent of asset quality damage. We'll see the spike in NPAs, if any, and that's when we'll really be able to distinguish between a quality banking franchise and one that perhaps has a weaker quality borrower.